Hi guys, this is Dr. Sadasivam once again with you. In today's post, we are going to talk about Taper Tantrum. Actually, we have heard of this Taper Tantrum. A lot of people have heard about it, but very few people have a complete knowledge of what it is and what it does. We have taken up this subject because some sort of Taper Tantrum, it is quite possible in a short time, in the short term. Exactly nobody in this world can happen when it can happen next month, next week, etc. But something on similar lines, it can come, and that is why we wanted to give a piece of our view. We all remember that Lehman Brothers collapsed in the year 2008, and that was the time when the recession in the United States caused shock waves throughout the world. Throughout the world, markets fell, your Lehman Brothers, your subprime crisis, and most companies in the world were affected, and many people started calling us the next Great Depression. Remember this Great Depression, which happened in the year 1929, and we have talked about it, some of the videos, and how the concepts of deficit financing, John Maynard Keynes, and why dams were built, investment was made in infrastructure. A lot of videos I have already put, you can go through them. So typically in times like that, what the Federal Reserve in US does is it purchases lots and lots of bonds from the market. So when the Federal Reserve buys bonds, it injects liquidity into the system. So from the perspective, when there is no liquidity in the system, there will be no growth, which is also called as quantitative easing. You must have heard of this word, and many a times these words are used, quantitative easing, etc. in the televisions interviews. They use words like accommodative stance, dovish stance, hawkish stance, etc., etc. Remember, we had put up a lot of videos on Reserve Bank's MPC committing meeting during the first week of June, in which I had explained partly about the stances, accommodative stance, hawkish stance, etc., etc. Because these things, we will be able to learn something. So government buying these bonds means there is more liquidity into the system. When there is more liquidity, there is more money in the system. So the money in circulation is also called as M1, M2, M3, and those are the different economic terms. And I will be putting up a video on money supply. But for now, let us try to understand. So when the government buys bonds, it puts liquidity, puts money in the hands of people so that people have money to spend, and this consumption engine in the economy starts working and chugging along, right? So you cannot continue that for a very long time. Therefore, what the government does is keep it for some time, and then they have to withdraw that money which is available in the market, because for a very long time you cannot walk on crutches. The crutches need to be thrown. So in the year 2013, somewhere during that time, they withdrew, right? So when more and more bonds were purchased, the interest rates generally reduces, and when the interest rates reduces, there's so much of liquidity into the system, and people start bringing that money to emerging markets, right? So in this particular case, after 3 or 4 years, when the government tampered, so the bond yields started going up when there is a taper, right? So when the bond yields start going up, the interest rates will go up along with that, and people started pulling money from the stock market, from the world, from the emerging, to pay interest. And nobody wants to pay a higher interest, right? That's the whole. So the money flows back from the emerging markets to service their interest obligations, service their loans. As a result, what happens is stock markets generally fall. It happened in the Indian market also. If you remember 2013, the Nifty fell by about 20%. If I remember right, it fell down to 5,100. It fell down to 5,100 from 6,200. It's not a very big fall as far as stocks are concerned, but if there is a fall by 20% at the index level, then that is something very, very serious. In fact, what happened was the Federal Reserve reduced their bond purchases, which means the economic word was they stopped quantitative easing. It is also called as a hawkish stance. We talked about accommodative stance, hawkish. Now it is hawkish stance when the government tapers. So why is taper tantrum important? Why are we talking about that in the first place? Okay, why are we doing that? So look at the current instances. Something what is happening in India is something very similar to certain conditions which existed at that point, because the Fed has been cutting its interest, and suddenly the Fed talks of increasing its interest rates, right? Why should it do that? Because obviously, like we discussed, you cannot use these crutches for a very long time. There is a specific time when the child or the toddler needs those crutches. Once it starts walking on its leg, we cannot make the child use that crutch for a long time. When the time comes, we take that back. We want the child to start walking on its own legs, and that is why we take away the crutches. And that's what we do when during times of crisis like 1929 or during recessions 2007, right? So 2007 subprime. After that, one happened in 2013 also. So at that time, yes, for some time you should use that. Even during the lockdown, we saw this index falling down to very huge levels. So it was also during that time, this liquidity was important, reduction of interest rates, money in the hands of people was more important to keep the economic engine running, right? That was the whole purpose. So what happens in the US happens in all the other countries. In US, what is happening is US economy is doing well. In fact, all the indicators of the economy, it is all doing well. Everything is firing from all the engines, firing from all the cylinders. So the Federal Reserve might increase its interest rates. Now you can remember last week just announced, it was not a proper circular, there was a hint from Jerome Powell that they might increase their interest rates. And how many of you are monitoring the market closely? If you remember, it was, I think, 15,800. I'm talking about 8th of June. It fell down like anything suddenly. Once again, it has started going up 15,900, and then it came down. Today, it's once again hovering somewhere around 15,800. So that interest increase has not happened, but everyone only talks about it. So something very similar to taper tantrum. I'm sure a lot of economists have studied, economic students have talked about it. So once that happens, there might be stock market crashes. Okay, so something, if somebody is a long-term investor, there's nothing much to worry. But people who are playing short-term games in the market, making money out of fluctuations, etc., you better be careful. Look at what's happening. You need to monitor the market a little more closely. And by and large, ours is a very self-sustaining economy, nothing much to fear, but these short-term fluctuations can always have its own share of disadvantages, right? So market might fall down. Today it's already at 15,800. People are talking of Nifty touching 16,000. Yes, it might touch 16,000. There's no doubt it will not, definitely. But before that happens, there could be some corrections. And one or two proper circulars from US about interest rate increase. You can surely hope the market can fall down to probably 15,500. So 2 weeks back we saw open interest getting generated at 15,300 also, right? So anything can happen. So people, once again, at the cost of repeating it so many times, let me tell you, people who have long-term perspective of the stock market, these fluctuations keep happening, but in the long run you will always get benefited. I'm talking about the long-term investors, but short-term investors, intraday traders who would like to make money out of these fluctuations, sell when it is high and buy when it is low, or short sell when it is high and once again buy when it is low. People who do that on a very short term basis, guys, you need to be very, very careful. Start monitoring, look at what's happening in the VIX, look at what is happening in implied volatility, and minute to minute, hour to hour, you need to see those, because if your investments are huge, it is at stake, especially when you play for short term gains. And that's the whole purpose. And for you to understand this concept better as to what kind of things can lead to volatility, Taper Tantrum is one, and that is why we wanted to explain what is Taper Tantrum to our viewers. Okay guys, hope you enjoyed this video. If you have any other topic in mind which you would like me to clarify or decongest, I think we do that. Right guys, this is Dr. Sadasivam once again with you, signing off till we meet again. Bye bye. Jai Hind.